All right, so here we are at the weighted average calculations for the anti-dilution, and we'll begin working through those. To begin, the first round or the first box or whatever you want to call this is the exact same as the previous two boxes. So to save a little bit of time and everything else, I'm just going to show you how to just copy and paste that over. So in order to copy and paste that over, all you want to do is lock in all the cells that reference the cap table. So I just do that by hitting F2, then F4 on those and going down the line and locking those in so they don't move. And that's all. So you can just take all these cells right here and copy them over to here. We should have the exact same numbers, no errors. Looks like they're exactly right. So that's all it takes to do that portion. So now let's move into the series A. And this is where it'll get a little bit tricky too. So first things first, we'll do amount invested by referencing the cap table. And that's that 2.1 million. The share price, I'm just going to highlight in like a blue color or something because we'll have to come back to that in a minute. The reason that is because we don't calculate a share price here for the weighted average method. What we do instead is we use Solver to calculate the share price, and we'll do that once we get down to the bottom. But I'm going to highlight in blue and then just stick a number in there, 7, just so we don't get errors as we go down the line. Okay, so then we'll do shares issued. So shares issued would be amount invested divided by share price. Then we'll do pre-money valuation. Pre-money valuation is from the cap table. And then post-money valuation is pre-money valuation plus amount invested. That should be second nature by now. Value would be shares issued times the share price. And that is all we're going to do there. So after we do that, we're gonna go over a little bit, come down here, somewhere around right here, and we're going to copy and paste. Well, I'm gonna copy and paste. You can match what I put in to calculate the conversion price for the weighted average method. So I'm gonna use these. And I'll delete those so that I can recalculate them for you. So what we do is we start by calculating the options, or we start by referencing the options from the series A. So we have to use those in calculating the conversion price for the weighted average conversion price. So let's go and grab the series A options from the cap table right over here. Next, let's do the CP1. So CP1 is the share price from the Series Seed round. Right there. Next we'll do A. And so A is going to be the founders and options shares from the Series Seed round plus the Series A options. Then we'll do B. So B is going to be the amount invested divided by CP1. Right there. Then we'll do C. And so C is going to be the shares issued to Series A. Then finally, we can go back up here to the top and calculate CP2. So CP2 is going to be the actual conversion price. So we do that by doing the CP1 times A plus B divided by A plus C. And that calculates our weighted average conversion price for this round. Of course, it's higher than the price that was issued to the series seed initially, so we wouldn't even use it. But at the same time, we want to go ahead and calculate it and have it working there. All right. So after we do that, we're going to go down here to the series seed conversion price and just simply reference CP2. Just for continuity, we're going to put it right there. And then after that, we're going to do weighted average shares issuable. So the weighted average shares issuable is calculated very similarly to the full ratchet shares issuable, except we're going to use the series seed conversion price. So in order to do that, we're going to go up here and do shares issued times the share price divided by the series seed conversion price. So that's the main difference there. And so that's still less than what was issued to the series seed because we're not having a down round once again. But these will work and whenever we do have a down round. So the next thing we're going to do is go up here to number of shares owned by the series seed and do the exact same if statement that we did previously and say if the share price here is greater than the share price at which the series seed shares were issued, then give us the actual amount of shares issued to the series seed. Otherwise, give us the weighted average shares issuable. It's that simple. Then we'll do value like we've done before. So that's number of shares owned times the share price. We'll do value gained loss just like we've done before. So we subtract this 1.29 million from it. Then we do value as if converted, do that the same way. And that's 7, which is exactly what our share price is right here. Next, we'll do full ratchet shares issuable. And we'll calculate that. So the full ratchet shares issuable is the shares issued times the share price divided by the new share price. So you can see the difference is that the full ratchet shares issuable uses the new share price. The weighted average shares issuable uses the series seed conversion price that we calculated over here. So now we'll go in and do full ratchet conversion rate. And on the previous on the full ratchet method, we use the if statement here, but that's not necessary because we're going to use the if statement on the weighted average conversion rate. So we'll do the full ratchet conversion rate is full ratchet shares issuable divided by the original shares issued. So see, our conversion rate is actually less than 1, so that we wouldn't even want to take that. That would actually harm us. And now we'll do the weighted average conversion rate, which here is where we'll put the if statement. So we'll say if the share price in the current round is less than the share price in the round in which they were issued, or the original share price, then take the number of shares owned and divide it by the original shares issued. Otherwise, just give us 1. So we're going to have 1 here, which is what we expected. Now we'll do the number of shares owned for founders and options. So that's going to be the million from the seed round, plus the options from the seed round, plus the options from the A round. The value of those is going to be that number times 7, or the share price. Share price will change in just a minute. The value gained or lost is going to be the exact same way we did it. And then value of converted value divided by number of shares owned. There. So now I'll do total shares as if converted. So we'll add up all the shares that are currently outstanding. So we'll add up the founders and options. We'll add up the Series Seed shares, and we'll add up the Series A shares. And then we'll do our market cap. So our market cap is total shares outstanding times 7. So that's where we get right there. So now we want to do the percent of company owned calculations. And so we want to take the shares issued and divide them by the total shares outstanding. or the total shares as if converted. And we can go down and do that for all of these different classes. For the founders and options. And so now we have, we'll have 100%. But the number that we need to say, or to have right here, is this 17.35537, and what we have is 16.686%. And the reason that was just a lucky guess on getting close on this 7, but what it needs to be is this number, the 17.355. So the way I got the 17.355 is by taking the amount invested, dividing it by the post money, 17.35537. That's how much of the company that was actually agreed to be bought by the Series A investors. So we'll just use Solver. Solver is just an iterative calculator, or it allows you to do iterative calculations and getting a number in the target cell by changing a variable cell. So the objective cell for Solver would be the percent of company owned, and we want it to be set to a value of that 0.1735537, the number we calculated right here. And we want to do that by changing the share price. The share price is just an input cell. It's not a formula in this weighted average calculation. So if we solve it, we can see that Excel came up with the answer for us. It's $6.68, which also happens to be exactly what we did here on the cap table. So since it's not a down round, it should look exactly the same right here. And that's all. That is exactly how we do the weighted average share price calculation for the Series A. When we do the Series B, it's going to be very similar to how we did the full ratchet. We just add in a couple of different shares issuable and conversion prices, and then we'll be done, and you can take that into infinity. So next video, we'll do the Series B.